The wild ride of global economics, from bond yields to bubble trading. Hey there, economic adventurers! And look who's swimming excitedly in his tiny Wall Street suit. It's Gerald, our financial genius Goldfish. If you're new here, welcome to our daily dose of financial shenanigans, where we make complex economic news digestible and actually fun. And if you're returning, well, you already know we're like the stand-up comedians of finance, but with better charts. Let's dive into today's economic roller coaster, and trust me, it's wilder than your crypto portfolio in 2021. First up, the big kahuna of news that's making Wall Street sweat through their designer suits. The US bond yield just hit 5%. For those wondering what's the big deal about bonds, imagine lending money to your government, but instead of getting ghosted like when you lend to your cousin, you actually get paid back with interest. And 5% is like finding out your usually stingy uncle is suddenly giving out $50 bills at Christmas. Something's definitely up. But here's where it gets spicy. This isn't just about boring old bonds. The dollar is flexing its muscles like it just discovered the financial gym, while the euro is looking more like it's been binge-watching Netflix and eating comfort food. We're talking about the euro sliding down to 1.02 against the dollar. That's almost parity, folks. For context, that's like finding out your European vacation just got a surprise discount, but also realizing your European friends can't afford to visit you anymore. Now, buckle up, because we're entering the political thriller portion of our show. Trump and Putin are apparently planning the world's most anticipated Zoom call since your grandma first discovered video chat during lockdown. Switzerland, being Switzerland, has offered to host their potential summit because nothing says world peace negotiations like chocolate, fancy watches, and numbered bank accounts. Trump's advisor, Mike Wolf, dropped a truth bomb that's about as subtle as a fireworks display, saying expecting Russia to leave all Ukrainian territory is about as realistic as expecting politicians to keep all their campaign promises. Speaking of shakeups, let's talk about the corporate world's latest trend. And no, it's not another AI startup. Major companies are doing the corporate equivalent of unfriending on Facebook with their DEI policies. We're talking Google, Coca-Cola, Apple, Meta, and Walmart all saying "New Year, New Me" to their diversity initiatives. And in a plot twist that would make Netflix writers jealous, JP Morgan just ghosted the Net Zero Banking Alliance. It's like breaking up with someone via text, but the text is a press release and the someone is the entire environmental movement. Now let's hop across the pond to Europe, where things are, well, let's just say they're having a moment. And not the good kind of moment, more like a "why did I invest in crypto at its peak" kind of moment. Europe's currently facing more challenges than a contestant on a reality show. Weak leadership, and we're not talking about your local gym instructor. Economic challenges, their industrial numbers are looking rougher than a teenager's first attempt at cooking. Currency weakness, the euro's playing limbo. How low can it go? And they're losing US support faster than your New Year's resolution motivation in February. The European Commission's response to all this has been about as effective as using an umbrella in a hurricane. Their solution? Well, we're still waiting for that. Like we're waiting for that friend who says they'll be there in 5 minutes. Now, for the plot twist nobody saw coming, North Korean soldiers have been captured in Ukraine. I guess Kim Jong-un wanted to join the party without sending an RSVP. The whole situation's being called a meat grinder, which is probably the least appetizing metaphor ever, but here we are. And because Mother Nature decided she wanted in on the action too, we've got some geological jazz hands from Japan, a 6.6 magnitude earthquake in Kyushu. But in typical Japanese efficiency, they handled it like it was just another Tuesday. No tsunami, no major damage, just a gentle reminder that Earth occasionally likes to shake things up. Meanwhile, in California, because apparently they felt left out, they're dealing with fires that have caused $50 billion in losses. That's not just burning through your monthly budget, that's setting the whole financial planning book on fire. Let's break down this disaster by the numbers. $50 billion in losses. That's like buying 50 million iPhones or one Twitter. X. 24 tragic deaths, which is 24 too many. Thousands of acres turned to ash. And one very important lesson about prevention being better than cure. So what have we learned today? Well, the global economy is basically a really complicated game of Jenga. International politics is like high school drama, but with nuclear weapons. Corporations can change direction faster than a cat chasing a laser pointer. And Mother Nature remains undefeated in the most unpredictable player category. Before we wrap up, here's your daily economic wisdom. If you're feeling stressed about all this news, remember that the stock market is like a yo-yo in the hands of a hyperactive child. It goes up and down, but over time, it usually goes up. Unless you're holding that one meme stock we told you not to buy. That's all for today, financial friends. If you enjoyed this economic roller coaster, don't forget to like, subscribe, and hit that notification bell. Because unlike the European Commission, we actually deliver what we promise. This is your favorite economic storyteller and Gerald, who's currently practicing his bubble trading strategies, reminding you that understanding the economy doesn't have to be as painful as paying taxes. Until next time, keep your portfolios diverse and your sense of humor even more so.